think I got my mic up too loud. I'm gonna just check that. I don't want it to be hearing clicking and the sirens and shit. How's the stream quality, guys? From my end, it's uploading perfect, pretty much. Like 99%, which is better than it was doing last week. Yeah, it was getting out of control. My wife was a little worried. But I took care of that this afternoon. I hope you guys enjoyed the NFP. Made a little bit of money on that. That was good. Pretty important day. Ended up being underwhelming just because the number was too close to expectations to get the people going. I mean, it was basically a Goldilocks number, right, in terms of not allowing market volatility. Yeah, this is Aussie Internet as well. This is NBN though, turf. I literally can't move to half the, not even half, 90% of the suburbs in Sydney don't have it. So I'm stuck where I am. I mean, I don't mind it. It's my wife's old apartment, so it's like moving back in with her, but it's... Grew accustomed to some finer things in life. You know, I want my own... I want an ensuite bathroom and a balcony. Although the weather here in Sydney is terrible at the moment, I wouldn't even use balcony if I could. The reason I'm disconnecting that trade through is that I click a lot on this and I accidentally can buy stuff if I don't do that. And I'm not paying full attention when I'm doing the update. And there's a fair bit of clicking and dragging. Alright, so on Thursday last week, I talked about the pound recovery trade. When that huge beat came in on the PMI, on the manufacturing PMI, I was like, wow, this is retail sales and PMI. I think that the markets misread the reaction to the Brexit here and priced in a recession, and the BOE's action has been enough to change sentiment. So this is just manufacturing surveys, okay? It's not actual real data, but it's pretty good indicator of how the market's going, all right? Because they're asking the right people the right questions, and majority of the time it does line up with, if it's above 50, then the sector is expanding. So the service sector is huge. Now, we talked about front running this. We talked about getting long the pound because those two pieces of data indicate that all the data coming out is going to be stronger. Because it wasn't a small beat, that manufacturing PMI on Thursday. It was one of the biggest on record jumps in data. Now, you're not going to have that manufacturing do that and nothing in the services. This recovery trade, while it's not talked about in banking reports just yet, I think is going to become a theme. The pound recovery trade. Given that the US dollar is not in a runaway US dollar strength mode, there's a chance of a Fed rate hike in September, but a small one. That's just keeping the dollar bears at bay. There isn't much else to trade. The euro is a snooze fest. The Aussie is a snooze fest. CAD is a proxy for oil, which for some reason is going bananas today. I haven't checked what's happening there in oil. I'm sorry. But it is by itself. There's no conviction story. You know, the only conviction story I see in the market, because I don't believe this BOJ stuff, right? This is dangerous stuff. Is the pound recovery trade. Is this price action disappointing? Yes. Is it already day 4 of the rally? Yeah. Okay, well, can't expect no non-pullback, and this is a pretty key level. But I'm pretty sure this is the real deal, right? I'm pretty sure this is worth a punt on. I mean, compared to what most of the reasons that you guys are trading on trades, this is real. This is potential for 1,000 pips. You know, I'm targeting 500 up to 138, but 140 really. If data continues to beat, there's only one direction here the market can go. We're not at 150 here. We're at the lowest level I've ever seen the pound. And the data's starting to turn and come in strong. And the Fed's benign. Okay, 1985 we have to go back to. We could be at the start of something massive. Now, how am I playing it? I'm playing it via short euro pound. Short euro pound is historically very high. The eurozone maybe has some more issues coming with member states trying to leave, and also, you know, referendums on that subject next year. ECB holding 0 for the next couple of years, and this level being extremely high only because of the pound, not because the euro is strong, just because of the pound. So looking for something which is going to remain weak in coming years, the euro is pretty likely. The yen is a bit more speculative. The yen, you're playing BOJ's ability to impress the market. Now the BOJ's are unreliable partner. We've seen that at the last BOJ. This time we've been promised something massive. Alright, but I just don't trust it, and looks like this rally has potentially petered out towards that resistance level that, you know, well, at least today anyway, showing a little bit of signs of exhaustion. Is pound yen still a thing? Yeah, pound yen is a thing. I'm just a little worried about that angle, about that leg. I'm not worried about the euro pound shorts, and I'm definitely not worried about the pound against the US dollar. And I think that there's a cleaner way of playing this. The commodity currencies is possible. Okay, we can get involved in that, but I don't usually trade pound Kiwi and pound Aussie. And while I really want to buy pound Kiwi, I haven't traded enough to talk about it on stream. I mean, it could be a good enough time to start as any, but, you know, literally in my 10 years of trading, I've traded pound Kiwi maybe 5 times. Right? I don't want to be a pretender that I know the size of the moves well, and I know the pullbacks well. I mean, even though it's a cross, right, you still get adapt to the way it moves. And the Kiwi's just being unreliable as hell. So if the Kiwi actually sells off aggressively, if somehow the RBNZ can get involved and do the correct words and create the correct environment here, yeah, pound Kiwi will probably be the best trade in the market in the next 6 months, assuming that this pound recovery trade is the start of something real. But yeah, let's just wait for that one to develop. We may just keep an eye on it over the coming weeks. Yes, transitionary, I did see, mate. No, this is why this is why we're buying pound before the data, mate. This is ages ago. This is last week. This trade is on the back of anticipation of the services being strong, and it's as strong as we thought it would be. It's not like super strong. The market was already whisper number well above 49, right? That 49 is just old economist number from weeks ago. This is probably 51, 52 was expected. So yeah, I can understand why the pound didn't go berserk, which is what it would have done if there wasn't the precursor, and if the market hadn't rallied 4 days. I still think we're going to break. I still think we're going to break today or tomorrow. And I'm buying dips, and I think the dips are going to be shallow. So this one could cost me if I'm wrong. You know, I might just buy a little just to make sure I'm in the game. A little anchor trade. don't do that at home. But an anchor trade is a small trade to get you involved in the main trade, and it's only a psychological trade. It's not for the money so much, because it's a terrible level, but it is for the making sure that I watch that market. And I'm looking to buy more aggressively 40 to 20, ideally 20. I mean, you might get that. It's a bit overbought. You might even get a full reversal for a day or two. But I'm pretty sure this is real. In terms of the next piece of data, which is probably going to confirm it or not. So you've had these PMI data. Now you're going to start to get the actual production numbers on Wednesday. Actually, that's 40 days old, so maybe not. Inflation hearing reports. Carney's going to be speaking again. Now, he's not going to be too happy with a recovery like this. He has to acknowledge, though, the improvement in sentiment. Trading for signal provider. Con Pipster. I'm an analyst, mate. I'm not a signal provider. But yeah, I don't know. We're talking about live trades, yeah. So if you're not in the short euro pound, you can get involved in that. Your entry is not going to be great, and anything back towards 83.80 probably should cap this. It'll be surprising to see us back above 84.10. So yeah, this pound recovery trade is the main trade I'll be looking at in the coming days, coming weeks. I like the fact that it's worth hundreds of pips, potentially. That's what really attracts me to a trade idea. And the extreme positioning on the futures market for the pound just suggests that this has legs. Everything about this trade is lining up. It's very rare you get a trade like this. And so I'm going to be trying to get as long as I can, as quickly as can, and as safely as possible. Alright, if we can build up a 5-lot position over the next 2 or 3 weeks into the Fed, where they're not going to hike, right? Well, most likely. Maybe ease up 3 lots or 2 lots into that Fed. Then, if she comes out dovish, or a little bit more dovish, and people start to lose faith in the Fed, and the US dollar sell-off trade happens because of Fed lack of legitimacy, then it could get serious. I mean, there's ways this gets to 145, and I'm not being overly dramatic here. I'm just saying that this sort of rebound to 140 is normal. There's no reason for it to stop this time, especially if the market starts to believe its own rubbish. And a trend, it loves a trend. We haven't had a trend for a while. We haven't had a good trend in the game. FX has been extremely sedated, like one of the least volatile years I've ever remembered. As the Fed's supposed to be hiking, we're supposed to see dramatic moves. Stocks have just gone to sleep. Look at this stock market. Alright, so I'm excited for many reasons. I'm excited for, this is crazy stuff. How long is this now? September. Since halfway through July. This is almost 6 weeks. 6 weeks of a 250 point range in the Dow. Get the hell out of here. That's ridiculous. You used to eat that for breakfast. Let's have a look at the weekly way back. Yeah, it's turning into some sort of joke. Those days it was running, what? These are 800 point candles. This is ridiculous. I wonder if we're going to have a dip to allow us to get back in here. I do wonder about stocks. You know, they're so stable that it sort of encourages aggressive buying on the dip. That's dangerous. There's going to be some problems if the market breaks to the downside. So yeah, let's see if this turns out to be real. I'm hoping it does for many reasons. I want to see a nice clean trade. I want to see a trend for 500 to 1,000 pips for the rest of the year, and I want to see something there that's worth trading. Because I can't justify some of these other moves, some of these other trade ideas. And it's been a while since we had something to get excited about, guys. So I'm gonna be watching this just develop over the next couple of weeks, and hopefully we can make some money out of it if you are watching. In terms of how the banks are viewing this, I mean, they're a little bit more reserved, of course. I think most of them are reserved because they've set 125 and 120 as their targets. Yeah, in regards to that oil statement, that could be interesting. I'm just reading the actual report. This is from the market. Let's see how broad-based this recovery is. I think they'll remain slightly dovish, or at least conservative, there, Armin, but they're going to have to acknowledge the pickup in data. You know, the data's potentially, not just it's just the beginning of this change in tune. Strong data begets strong data a lot of the time. It could be just a little bit of a bounce to the BOE, but I think there's a chance here we've got legs. Alright, service sector confidence has returned to pre-referendum levels in August, having spiked lower in July due to uncertainty generated by the Brexit vote. Firms linked positive output expectations over the next 12 months to export opportunities, reduced uncertainty, stable markets, product launches, expansion plans, and recovery of the energy sector. The overall strength of sentiment nevertheless remained relatively subdued amid reports of ongoing uncertainty related to Brexit. Alright, so the ability for things to get even better, if the world doesn't end, I think is there. This is a record rise in the services PMI, and adds to the encouraging news seen in the manufacturing and construction sectors in August to suggest an imminent recession will be avoided. Think about that. 130 is because of the recession talk. There's no reason for us to be near 130 if the UK is not in recession. So I mean, this is a strong conviction trade for me, and I'm rarely strong conviction. I mean, the Aussie Kiwi is a strong conviction long-term trade just because I don't believe it can go below parity. Alright, but I understand why it's so strong, as in the Kiwi is so strong relative to the Aussie. I don't know when it's going to turn. I don't know how it's going to turn. Specifically, when it's going to turn. But, I don't mind holding loss on that trade. This is a different sort of trade. The pound trade is a very different sort of trade. And maybe I'm getting excited. Maybe I should be a little bit more cautious. But I don't think it's it's a group trade yet. It's definitely in no way positionally ready for the market. So it's a sort of trade that I think has that real strong potential. Let us have a look at some of the technicals as well from the banks, boys. I want to see where the pound big levels are according to some of their models. Not just the Credit Suisse. We look at the Credit Suisse, but you know, every few days. But just wanna see what else is out there. I don't trade $R much, Natters. Yeah, I can understand why you see the political turmoil, though. I think it'll be slow to begin there, Ferry, when the pound will begin. I think it's begun, right? I think that it will get faster and faster as the short squeeze happens. I don't think the short squeeze is on just yet. Oh, I like that trade. I like that trade, FinQ. I'm very interested in Wings short trade. So I didn't see these trades before I went on my rant. And hopefully I'm not upsetting him by that rant. It's not meant towards you, Wings. What is the trade? Some sort of counting technical system. Okay. Turncoat support. Okay. Alright, whatever that is, that looks pretty good. I mean, look, you can't have the market rally like it's rallied in the last 2 weeks and not be strong technical signals. But let's see what Wings has to say. Oh, he's just looking for a short-term pullback. That's fine. Okay, that's fine. I would love to buy down their Wings. Hopefully we get that. You know, that like I said, that first trade I just did then was an anchor trade to make me watch the charts every couple of hours. Oh shit, did it just fall while we're talking? Okay. Alright, well, we're buying more. Let's just make sure there's no real crazy news out before we buy a serious trade. This oil statement is due in 2 minutes. Or is it the statement that Saudi and Russia are to meet the next OPEC meeting? Is that it? Is that the actual announcement? Come on, there has to be something more than that. Okay, they're going to make a joint statement. Someone told me they were supposed to be announcing in 5 minutes. Transitionary. So that was 15 minutes ago, so right now, right? Is that it? Is that the statement? Geez, they're masters of market manipulation. RBNZ Wheeler should talk to the Saudis about, and the OPEC about manipulating oil. They're doing a great job here. BOJ's Kuroda should talk to them as well. But this is very dangerous, right? If you're long oil, be very careful about this. This could easily disappoint if there's not substance to it. Alright, Wings is out, so we can buy more, boys. Yeah, this is just a little bit overbought, right? So the market's pulling back. Not letting people get long to risk-free. Oh, this would be terribly embarrassing if that's the high of the month. Nah, don't think like that. Don't think like that. One candle does not make you change a whole trader, do you? Yeah. There's been a few of these. I will just sit on the sidelines though. I want to see some tentative support. I'll actually add more on the way back up here if it starts to grind back high. You don't have to actually continue to buy just off a level. Sometimes you want to see solid support come in. But it's nearing the buy level that I wanted. Alright, let's have a look at the actual data though, guys. The actual technicals. So pound's doing nothing. Yeah, dollar yen is threatening. Alright, so these guys are going neutral, right? Well, they're long, but they're still pretty bearish in that undertaking. I really wouldn't trade the Aussie at the moment, guys. It's really got nothing for me. I can't. I mean, this is a pair I trade the most as well. And it wouldn't surprise me tomorrow if we're down 50 pips or up 50 pips. Although at the moment it does look like we're going to rally today. It's, I think, a little bit contingent on the oil as well. Even though we're not straight oil, it's definitely not hurting. And yeah, it does grind higher when there's no news. It's not that. Yeah, I'm not that convinced. There's better pairs out there to trade, for sure. I haven't got much pound Swiss. I'm going to buy a little bit more pound Swiss. Now, word on the street is that the next dairy auction, which is on Tuesday night, I believe. Let me double check that for you, boys. Alright, it's Tuesday night, so Wednesday morning. Or if you're Australia, it's midnight on Tuesday. Right, 11 p.m. Tuesday. There's a dairy auction. Now the futures in the dairy market is suggesting another 10% hike in the price. That's on the back of an 18% price hike in the last month. Alright, so Kiwi's going to be well supported here on that rally in dairy because that's its main export. And that's a threat to the Aussie Kiwi trade, of course. and it's a threat to selling the kiwi. Anyone who wants to sell the kiwi. So just be a bit careful about that. The dudes who are giving that information are usually right. Alright. Look, given that the market is pretty much a one game trade at the moment, unless you guys have got me something to look at, the main thing I'm going to be focused here is on this pound. Not a bad little candle here. It's hard for the market to ignore that. You know, short term overbought or not, it's hard for the market to ignore that data. Let's have a look at one more report before calling it a day today. If you like what you're looking at here, this is FXWW's chat room. It's made by a guy named Sean Lee, ex-Deutsche Bank trader, one of the Forex Live analysts. Yeah, sorry boys, one sec. Alright, I'm back in business. So yeah, the FXWW chat room is a Reuters chat room. They also offer a little package to get Reuters news, which is probably the fastest way you can get access to news. It's faster, you know, when the dude's reading Rand Squawk, he's reading off a Reuters machine or a Bloomberg machine. So they both release as quickly as possible. So it's not a bad way to improve your access to data, which at the end of the day is a great leveling. I mean, it can't hurt, right? But you got to be trading at a certain level just to afford the costs. It's $150 a month for both. $100 or $50 just for the chat room. Reuters ain't cheap though. The proper Reuters is over $1,000 a month. This is a cut down retail version, but it has most of the stuff you need. Unless you're looking at volatility curves, you don't need, you know, option volatility curves. You don't need the full version. Unless you want to look at, you know, the ex-Russian company or some Libyan stock exchange, you don't need the full Reuters. In terms of the dollar yen, I didn't actually touch on this, why it's fallen so fast. It's that the BOJ Kuroda disappointed again today. And technically we did need a pullback and we just got a reason for it. And the US dollar weakness hasn't helped. And which caused US dollar weakness? Was it you know, dollar yen, or was it the US dollar itself? It's hard to know. As in the Asian session today, but you know, it doesn't help that Kuroda didn't specify a particular day, so a lot of people are priced in that September 20, the BOJ's next big meeting. You're going to see an announcement, and if we don't see that, then you will see more further disappointment, and potentially we're going back to 100 again on debt disappointment. Now, if we go back to 100, I'm not buying this time. Definitely not buying this time on the next move to 100. If that happens. You know, it's still relatively holding that daily downward trend line all the way since back in March. So there's no reason to get ultra bullish here. Your BOJ, you can't rely on the BOJ. Alright guys. Yeah, it's FXWW. Chilled vibes. I do contribute there sometimes. I don't do too many comments though. Mainly because it's all super serious traders, hedge fund traders and bank traders. Alright, it's not some place where you say, wow, look at the Aussie. You know what I mean? Like, it's if you have something to contribute, you contribute. Otherwise, just let people know. You can't actually type in there though. You know, there's only a handful of you're buying read-only access. There's only a handful of the dudes contributors. But I've known Sean Lee for a while. He's a very good analyst. If you've traded for a while, you probably remember him at FX Live, at Forex Live. Alright boys, good luck with your trades. I'll be back tomorrow 9 GMT, give you an update on all the latest fundamental. Try to give you some good trades. Keep an eye on this pound. Want to see it trying to find support here after this little pullback. We don't want to see it below 133. But I believe we've got ourselves a potential, you know, a potential real long-term, medium-term trade developing. And it's the first one for a while that has me excited. So let's see how that goes. Other than that, trade safe.